Hello, Premium Gang. Good to see everybody today. Hope you're enjoying your day. It is 2 o'clock, and we are here on our live stream. Got ES up on the screen. And let me make sure I can see your comments. There we go. Says there's just one of you in here right now, so whoever it is, good to see you. And we'll get started here very shortly. We'll be discussing this nice move to the downside. Hey, Cathal, you're the one that's in here. Good to see you. It's a cold, dreary day today. Overcast, cool. It's supposed to be beautiful the rest of the week. So if I seem a little sluggish, I have not had my walk yet today, and just really been looking at the charts. Lots of good stuff. Lots of good stuff. There we go. Now we got some other people joining us. Hey Riz, we're definitely going to cover both Apple and Tesla today. For sure. For sure. So just as we are sitting here talking, this is the new candle, and as you can see, it's already starting to go red. We do have the 200 right here. I've got an alert set there. I had that set there earlier because I was looking at some other things that was going to tell me if we hit or got below the 200. Actually, I think I set it when it was clear over here. But we'll see if we continue to move to the downside, which at this point doesn't really matter whether we do or don't. Last night, let's just look at it. Here's where we started. This was 6 o'clock yesterday, which is the beginning of today's trading day for the futures. The day starts at 6 p.m. Eastern every evening and then runs through until 5 p.m. today. So that's where we started. So let's look here. So we opened the day at 29.56.50, and as you can see, we're at 28.91 currently, right? So that means we're down over $66. Then this is what happened during the overnight session. We came down to the 20, caught some support, had this nice climb back up here to the top of the expanding range and to the 29.61 resistance level. We got as high as 29.65, and then that was the beginning of the sell-off that has been going on since then. So that occurred at midnight. How about that? At midnight. So from midnight until right down in here, we've had this nice downward, lower low, lower high. Although, as you can see, we kind of moved across there, but that is our lower high, lower low, lower high, lower low, lower high. Just been moving down. I put a tweet on Twitter a little bit ago. I said I find it amusing. All these folks yesterday, these Twitter pros, as I call them. Wouldn't have been a stretch, right? I mean, at the end of the day yesterday, see how we ended. Seeing all these people calling for 3,000 today. And why I said that wouldn't have been a stretch, I mean, heck, we were already up around 29.60. But they're calling for 3,000. I think I seen one guy, he had a target of 30.41 today. And then overnight, we kind of sold down, came back up, got to 29.65, and now it's been all downhill from there. Now to us, that shouldn't be any surprise, right? So let me squeeze this in. Give you a better view. Okay, right? So to us, this shouldn't be a surprise. Remember, I talked yesterday when we were on our live stream. We were in the expanding range here, and here we went back and forth a couple of times, came back here, kind of came over to here, back up, and then we had just sort of been bouncing along the top of the range. Remember, I told you, we do not, when you're inside of an expanding range, you do not necessarily just have to go back and forth, back and forth, back and forth like that. All right? We're just still inside the range. We've occasionally poked our heads up, dropped back in, poked our head up. Now we're moving back through the range. So that's not surprising, right? So there was two schools of thought that I saw today. So coming into today, even though this is what happened overnight, there were people saying, just wait till the market opens, we're taking off. We're going to the moon because we had great earnings reports after hours last night. And we did. We had some really big companies that had good, positive earnings reports. Some were shocking that they were that good. Tesla being one of them. Nobody expected their report to be as good as it was. I don't think anybody thought it was going to be bad. They just didn't think it was going to be as good as it was. And there was others. There was big companies that had good earnings reports. So, there were some people basing their numbers and that we were going to go up today on that, right? Positive reports. Other people were saying, hey, we're so close to 3,000 that it'll just be a magnet. It's just going to draw us right up there. Now, could that have been possible? Sure, and I'll show you how. Let me do this. Okay, we could have, look at how long we've been bouncing along the top of the range. We could have just continued to bounce along the top of the range up till there. So, that's not out of the realm of possibility. But once this started to happen overnight, to me, it was fairly apparent that we were going to start moving back through the range. Do we make it all the way back down here? I don't know, right? I'm not trying to predict the future. We might. We've made it more than 50% through the range already. Okay, you could just start here where we started to move and take this number, whatever it is. Let's see here. We can do it. 29.65 and basically 28.28. You can divide that in half. I'm horrible with math. I see we got several more that have joined us. Welcome. 29.65 minus 28.28. 29.65 minus 28.28 divided by 2 plus 28.28. Okay, so halfway was 28.9650. Let me find that. 28, just above this level right here. Okay, so we've already traveled farther than 50% through the range. Okay, from this high here, that's all you got to do, right? So we've already traveled farther than 50%. Now we know that, again, there's no guarantee we're coming all the way down here right now. Okay, at any time this could head back up, or we could head back up a ways, then come down. Bigger structure level on a more macro level. This is the 30-minute chart we're on. But again, this was not surprising to us because we knew we were in this expanding range. So then today, everybody starts saying that this move during the day is because of the bad economic data. Come on, right? We were already moving down. The momentum was already coming this way, and we didn't get a huge spike down. Right here, here's your 8:30 candle. Let me come in a little bit closer. Whoops, sorry about that. Let me get in a little bit closer for you. Right here. Here's our 8:30 candle. I mean, it wasn't dramatic. It was a basically a $22 candle. Okay. I mean, yes, it was negative. The data was negative. But the last two reports, the data was actually worse and we ramped. Remember? The last couple times we've had the jobless claims, they've actually been worse than the data that came out today, and we ramped both times. Okay? So, again, that's what, a lot of these Twitter pros are going to say, okay, that's why we've moved down today. Economic data. Other people are saying it's because of China, right? President Trump wants to get into a fight with China. That's why we're moving down. Price action is why we're moving down. All right, it's not all that other stuff. Those are going to be little blips, right? Little blips on the overall radar. It's price action. That's why we're moving down. Gotta get your comments back up here. All right, so now we've sort of kind of stalled out right here just below 28.95. All right, I adjusted my levels today. I hadn't adjusted them in several days. And they were just small tweaks. I think this one got moved a little bit. I think this one, I can't remember if I added this or if this was one that we tweaked. I know this one got tweaked like a couple of dollars. But anyway, really nothing major. Most of these things were right about where they were anyway. They just needed to be tweaked. Hadn't been tweaked in a few days. But anyway, you can see where we've stalled out. Right kind of in here. I'm looking at it. I mean, nothing's really jumping out right now. Let me see here. No, I mean, nothing's really jumping out at me in terms of, do I see anything that says, hey, we're about to blast up, or hey, we're going to fall off a cliff right now. Right now, until something changes, the momentum is to the downside. So until something changes, the momentum is to the downside. All right, so let's look at these other names, and we're going to start with the two that Riz wants first. But let me set an alert in case we do start to spike up. I already have one below. Okay, so now I have one up here if we get up above this pivot, and then I got one down here if we get just below the 200. All right, so let's look at Apple first. Apple and Tesla are the two he wanted me to start with. Okay, so Apple, compared to yesterday, we gapped up. Okay, remember the gray is the after hours. Okay, so we gapped up, we came down, we tested support, then we went up, kind of popped up, nice pop to the top side, and then just like the market, just sort of faded throughout the day. Now it's caught some support again, same level, right? Same level. Yesterday it was resistance right here. Okay, support, support, support. Now it's worked its way back up to the 20. It's kind of poking its head above the 20 right now. Okay, so we'll see. Let's look at it on the daily, because that's where we're going to start with Twitter anyway. My Thinkorswim is just crawling today. All right, so here we are on the daily. Again, we gapped up, came down, pushed up, and then we already know we came all the way back down again, and now we're pushing up again. So it's happened a couple of times today on Apple. Looks like we'll eventually, I mean, we've got a couple hours to go. If something dramatic doesn't happen, probably going to finish as somewhat of a spinning top, or if it starts to move down, this could end up being a shooting star. All right, so that's Apple. And Apple, I believe earnings are tonight. Yes. Yes. Okay, so more big names. Like this week was loaded with big names. Loaded. Google and Amazon and Apple and Tesla, and the list just goes on and on and on and on and on. All right, so Apple, okay, made a move upwards before earnings. Now, can we read anything into that? I mean, some people believe if you ramp up, right before earnings, and this is what they would call the ramp up, the days leading up to earnings, typically earnings aren't going to be great, and then you're going to pull back. Okay, some people believe that. Other people believe exactly the opposite. If you sort of fade into earnings, it's because the market is trying to price it in, and then, the earnings are going to come out and you're going to ramp. Okay, we'll see. We'll see. All right, let's go to Tesla. Now, Tesla was one of the names on our list. Let me get over to it. Let's see. Yes, right here. Okay, it was a daily inside candle, and we're going to go through these. Okay, but we're going to start with Tesla because Riz wanted us to look at Tesla. So let me get back to the chart. All right, and let me find it. Here it is. Okay, so Tesla, and literally we just had an alert go off not too long before we got on the call. The alert went off. Okay, here's our inside candle. All right, so we gapped way up here, but you see I had this alert set. I'm going to tell you where this alert came from. The alert that I set up here, I noticed before market open approximately where we were going to open. And I set this alert to let me know, okay, if this goes off, we gapped and we're going. It never went off. You see that? Never went off. Okay, then it's had this strong sell-off throughout the day, took this out right here. Okay, my trigger went off, okay, taking the bottom of the inside candle out. And from the bottom, which I believe was, I want to say it was 783 something. I'll tell you exactly. 783.12 was my trigger. We went as low as 765, so just over $8 from the trigger. Now, an aggressive play, right? An aggressive play would have been we gapped up and we started to go, right? You could have either entered. Now, I wouldn't have. That's why I had this alert up here, because this is so volatile. And I kind of expected this might be what happens. That's why I put this alert up here. Tesla's famous for stuff like this. The move came after hours, right? They had a much better than expected earnings report. This move came after hours. That's where this big gap came from. It started to go up, and then it reversed. And when you take out the opening price level, the aggressive plays, you could enter there with a tight stop, and then look what would have happened. And I saw some people on Twitter who did this. And kudos to them, because those guys made a mint on Tesla today. So when it started up and then reversed and came back through opening price level, you could have got in and you would have been able to ride this thing all the way down. So opening price level was 855.19, and it went as low as 765. That's almost a $90 move. It is. It's a $90 move to the downside. And even if you then, kind of bounced against you, say $5 or $10 or whatever, and you still catch it for $80, that's awesome. Okay. But if you were conservative, just from our trigger, it went $8. And again, as it backed up on you, maybe you get out with 6 or 7 because you might not catch it right there, obviously. Okay, so you might only get $6 or $7. So from a conservative trigger, you could have made maybe 6 or 7 if you were super aggressive and it came back through here. So what did this turn into? A single candle power reversal. I mean, this is as powerful as it gets, man. Like we said, this whole candle is like 90 bucks. Or actually, I take that back. From open to the low was 90 bucks. So even if you caught $80 of that, can you imagine? Now you got to be able to afford it, right? They're expensive. Let's look. Let's look here. $1,670, $1,860. So the puts, again, you notice how the puts, well, it's changing now. They're changing now, but the puts were a couple $100 more. And let me just look down through here. They're pretty equal. The puts might be slightly more expensive. Remember, I gave you that little trick. If you notice one side is more expensive than the other, especially if it's dramatically more expensive, that's telling you that the market makers think it's going to go that way. But anyway, they're expensive, right? One contract, $1,855. But let's look and see. So if you bought at the money, I got to do this. I think you got to go opposite. If you bought at the money, 775, and really it's not going to be accurate now. It won't be accurate now because the volatility is going to have changed throughout the day. But let's just say you would have made big money. Like I saw people bought way out of the money because they expected this. And they bought way out of the money. I mean, they were way down in here, okay, when price was up at 855, which would have been clear up in this area, all right? They were buying, people I know were buying so far out of the money, they were getting in at like $4. That's how far out of the money they were buying. And then when price reversed and went their way, then things became enormous. I mean, because look, so if you bought, this is just to give you a general idea, $855, so $80, 55 plus 25. All right, so I got to come back to here and then go to 775. All right, so right in here. Now, this is what these are now. But at the time, these probably would have been, $3, $4, $5 each. And then go all the way to, $850, which is only a $75 move. You see that from $17.75 to $73.40 or even close to $80. But again, at the time, these that were that far out of the money were $4, $5, $6, and I saw people buying them. And then when it plunged, man, them things just skyrocket, right? They just skyrocket. So there were people made tons of money on Tesla today. Tons of money. Okay. We haven't had any alerts go off on the market. Let me bring your comments back up. Hey, Yusuf. Good to see you. Our newest member in the premium gang. All right, so let's just start going down through the list here. Baidu. We'll go down through the watch list. Baidu. Get back up here. We're on our daily because that's where these signals would have came from. Okay, Baidu was an inside candle. Right here was our trigger. Our trigger would have been at around 99.92, and it went as high as 98.66. So not quite $6. Let's say $5.50 to the upside on Baidu before then it pulled back. We can go to the 30-minute, and that'll give us a better idea of how did price react. Okay, so there it is. It went right up. Okay, initial move to the downside and then blast off. And we said 99.92, right? I think was our trigger. So that was right about in here, right there, I saw it, 99 and 92. So our trigger would have been here. Look how easy it would have been to ride that up. Then you probably would have ended up selling somewhere back in here, around 102.50, let's just say 102.50 to make it easy. So 98 to that, about $4.50 on Baidu. Realistically, you could have caught $4.50. That would have been getting in down here. Excuse me, $3.50. Let me get my math right. $3.50. Okay, ride it up here, and then when it pulls back, you know, probably end up selling somewhere in there. Okay, just being realistic. But again, a winner right off the watch list. Beyond. Okay, now this is one of my favorites. One of my favorites from today. We got to go back. Let's go back to the daily. Okay, I already know, and you guys already know, Beyond gave us a single candle power reversal. And you guys saw my updates because I was watching this in real time. So here was our inside candle right here. And again, we love when we have dojis or spinning tops as inside candles. Our initial move was $1.60 from our trigger down. So let's say you made $1.50 or $1.40 or whatever, okay, on the move down. You make a little bit there, starts to come back through. When you come back through opening price, the aggressive play is to enter with a tight stop, and then you catch all of this. It comes all the way back through the range. Went all the way up here. It went to a high of 96.13. You would have entered, excuse me, high of 107. I'm sorry, high of 107. You would have entered at about 98.25, 98.25, we'll say to make it easy. Again, you're not going to stop right at 107. Okay, but let's say it comes back on you $1. I don't know if I'd let it come back $1, but let's be conservative. Okay, so from 98.25 to 106, that is $7.75, right? Yep, $7.75. So you make $1.40 maybe going this way and $7.75 going that way. Okay, that's just a gorgeous play. Gorgeous play. Now that's got earnings coming up May 5th. So that'll be next week for Beyond. But there is your classic single candle power reversal. Takes out this side first, comes back all the way through the range, came all the way back up here, then it faded later in the day. All right, so that was Beyond. And next one, CGC. I don't know if anything happened with CGC today. Let's look. Okay, we gapped down. Absolutely. Holy cow. We gapped down. We tried to come back up. We couldn't. And then boom, flushed. So let's see. The trigger would have been around 1675. And it went down to 1582. So that is, let me see, 75 and 18. What is 75 and 18? 75 and 20 be 95. So about 90 cents, right? And we know that's good on CGC. That's money. Okay, so not quite 95-cent move. And again, bounces against you. Maybe you get out with 80 cents or 75 cents, something like that. All right, so CGC, it worked to the downside. I might have missed the trigger. Right here, I would have had them both set. Maybe it went off. This morning, like shortly after open, man, I had just triggers just going off like crazy. So I might have missed that one. Okay. Let's look here. Next one, Home Depot. Home Depot. Right here. Okay, there is our inside candle. Okay, we gapped down Didn't really do anything. We've come back, okay? No real trigger there. No real trigger because we didn't gap and go. So this would have been a nothing. This would have been a nothing. Okay, what is our next one? NVIDIA. NVIDIA. I'll just type it in. All right. Did we get any trigger on NVIDIA? Here is the bottom of our inside candle. So we would have triggered at 293.70. We went as low as 291.72, so almost $2. So maybe you catch $1.75, $1.50 right there. Okay, then it reversed, okay, and was trying to come back through the range. Reversed. So if you wanted, you could have tried right here. It's an aggressive play. Open is 296.29, so 290, just say 296.35, and it went as high as 298.46. So that was another $2 that direction, and then it reversed and came back. All right, so you could have made money in both directions on NVIDIA if that's something you were paying close attention to. Next one, SNBR. I think this is called, this is sleep number, SNBR. All right, here's our inside candle. We gapped. We tried to come back. We couldn't do it. We pushed down, right? So once you take this out, that's where you would enter. 30.75, it went down to 29.45, so that's $1.30. Maybe you catch $1 of that. Okay, again, I'm just trying to be conservative. Once it starts to reverse and comes back on you, if you were up $1.30, $1.35, I wouldn't let it come back too far against me. So let's just say $1. So maybe you make $1 there. All right, but it did what we we got a gap down here from the inside candle, kind of pushed up, and then once it comes in and takes that out and goes lower, there's your trigger. Okay, next one was Tilray. All right, and our friend Kelsey was trying to play Tilray both ways today. Now these lower price stocks, and I was having this conversation with her, they can be a little bit tricky, especially to the downside, right? When you're already down here around $6-7, it's typically you're not going to get these huge moves to the downside. But the trigger was, the low of this was 801. This gap below and opened at 795. And let's go to the 30-minute. If I remember right, let's just go there. That way we can look. Okay, yeah. So this is where it opened. But if I remember right, it moved this way just a little bit. Then it came down, okay, and it flushed down here. The low was 770, so it was a 25-cent move to the downside. Then it bounced and came back through. Once it takes this out at 795, you can enter looking to go back through the range. And it went from 795 up to 855, then it pulled back here. Right? This is where Kelsey had to get out. Then it did come back through and it popped just up to 875, and then it's been selling off the rest of the day. Okay, you're usually not going to catch this when this goes against you. Okay, so this was 855. This candle opened at 847. I was telling her I would probably have tried to get out around 850. Looking at this, maybe 847 might have been more realistic, right? Once you go back to the open of this candle. So this was green. Okay, we went this way after we reversed. Okay, so you get in here. You ride this up. When this opened, it immediately went green. Then it flushed down to here. Then it came back up. It formed this dragonfly doji. Then over here, it took this pop. Then it came down and it's been selling off. All right, so the play would have been from $7.95 to about $8.47. So about 50, what is that, 53 cents? 52 cents. 52 cents. And on Tilray, that's good profit. That's good profit. Okay. But that one, these are trickier. These cheaper stocks, they can get trickier than when you're playing a bigger stock that's going to move in a much smoother manner. So just keep that in mind. All right. Let's look at, what's the next one on our list? We already looked at Tesla, DPZ. So now we're going to look at a couple of outside candles. DPZ, Domino's. Did Domino's give us anything today? Here's our outside candle. Here would have been a trigger. Trigger at 367.30. We went as high as 370.20. So not quite $3. Not quite $3. Maybe you get out of there with 250, 230 before it comes back in. All right, so it triggered. It moved almost $3. And then it came back and it just sort of settled in. Hasn't come back through opening price level. So we weren't really looking for anything there. Okay, if it takes out opening price level, right, then we start thinking, okay, are we going to move back through the range? All right. So that was Domino's. So that gave a couple of bucks. Okay, GDX. I think one or two of you were asking about this yesterday. Gold Miners Fund. This is an ETF. And here's our outside candle. Here would have been the trigger. The trigger would have been, okay, taking out 32.82. So just to make the math easy, 32.80. And then the low was 32.20. So 60 cents. Maybe you get out with 50 or 40, something like that. Let's look here. Just had an alert go off on AR. We're going to look at it here in a little bit. I'm just seeing what a 50-cent move would pay. All right, a 50-cent move would pay about $22 per contract. About $22 per contract is what a 50-cent move on GDX would have paid today. Just to give you an idea. All right, SHOP. SHOP was a hammer. And right here, and we really didn't have anything to do. Okay, nothing to do on SHOP. Although it'll probably be on our list for tomorrow if I go back to it real quick. Because what do we have here? We've got a shooter countering a hammer. Okay, so we'll probably take a look at that for tomorrow. Then we have BA. Now we're going into shooting stars, BA. Get over here, Boeing. All right, let me kind of close it in just a little bit. Doesn't really look like we had much to do here. It did trigger. Let's just take a look. Maybe it's more than I think. 35.25 was the trigger. And it went as low as 132.31, so almost $3. All right, so it did. It triggered here. And it came within 6 cents of being a $3 move to the downside. So maybe you make $2.50 on that, right? Again, just trying to be conservative. Maybe you make $2.50. Maybe you make $2. All right, so that was on BA. It did trigger. When I first took a glance at it, I was like, oh, that probably didn't, but it did trigger, and it moved within 6 cents of a $3 move. Okay, and then GE. Now, GE is another lower price name, so they can be tricky. They can be tricky. So let's see what we got on GE, if anything. There we go. Okay, it triggered. But did we get any kind of a move? Let's look. Low, 652. So let's say 650. And it went, it only moved 9 cents. 650. Yep, 9 cents. So it really didn't get us anything. Didn't get us anything. Right here, it had earnings, estimate, actual. Okay, it looks like they missed earnings, but it really didn't affect them. I mean, they're so far down anyway. You guys know, if you pay attention, GE has just been ravaged. Let's go back even more. Yeah, here we go. Okay, you see where it's come from, and it's just really been ravaged. So you're just not going to get a whole lot down here. You almost hope that they surprise and then you maybe get a pop. You're more likely to make some gains on these smaller ones to the upside than you are the downside. So if they would have somehow beat earnings or been in line and they get a pop, you might catch $1, $1.50, which would make you some money. But 9 cents isn't going to do you anything there. All right, now AR, SNGX, and VXRT. AR, we literally just had an alert go off. Let's go to the 30-minute. Okay, right here would have been our trigger at 295. It's only moved about 8 cents. So nothing major. And we wouldn't be playing these kind of names this late in the day anyway. So it sold off, came back up, never triggered, sold off again, came back up, and it just triggered here. But you're not going to be playing. These are our small account growth names. You're not going to play them at this point in the day. SNGX, I believe it also sold off. SNGX. It did, and it's never recovered. So we never triggered. Trigger was clear up here. Nothing to do. We never got any interest other than the pre-market. VXRT. VXRT. I don't believe it triggered. It did not. Same thing, right? Same thing. It would have had to have triggered up around here. It never did. It sold off, so nothing to do. But then the good one, which was only given to you right afterwards, right here, I said add UAVS. I found it right before we went live, UAVS. This was the good one. So right here was the trigger, right? Here's your last candle before we open. Price actually dipped and then boom, pop, big pop. So our entry was at 370 and it went this initial pop, and this might have been all you caught. 428, so that's 58 cents. So if you caught 45, 50 cents of that, and that's all you caught, that's awesome. It went up here, it pulled back right to our entry level, and then boom, popped again. So this one had 2 pops, one back, and then again. So this was the break, obviously, of the pre-market highs. It popped, came back to retest, and then popped again, and then it sold off. And as you can see, it really sold off. The reason that we only like to play these right at market open is because of this right here. I tell you guys this almost every day. All right, why do you see a gap from here to here? It's because of the circuit breakers. So remember I told you these names that are really cheap, if they start to move, they have what's called circuit breakers. Well, obviously, when this circuit breaker went off and then came back on, look how far it gapped down. It actually gapped down clear to here, went to the 200, made a little bit of a recovery, but now it's just been hanging out down in here. Everybody just got out. Everybody just got out. All the interest was right here. And that's how it is. That's frequently what happens with these kinds of small account growth names. So I tell you, we're not interested in what happens later in the day. We're more interested in what happens here early. Okay. Let's go back. We're right at 45 minutes. Let's see what the market's doing. Obviously, neither one of our alerts have went off. Nope. Okay, we're still flat. We're still flat here. Can you guys see my screen okay? Somebody just type in that you can. Because the only reason I ask is I'm live looking at my phone and it's just showing a blank screen. I just want to make sure you guys can see my screen. Nobody said anything, so I'm assuming you can, but on my phone, it's just blank. All right, so you guys can see it. I can't. That's interesting. I just wanted to make sure. I kind of assumed because nobody had said they couldn't see it that you could. I just wanted to make sure. All right, so again, we just sort of went into a range here on ES. We could even, let's see, 1, 2, 3, 4, 5, 6. We're kind of at 6 candles. This really, I don't know if I would exactly call it basing. I mean, I think it's more of a contracting range than basing. Draw it in for you. Okay, sort of like that. A little bit more of a contracting range. You know me, I'm always looking for ranges. So will something pop before the end of the day? Maybe, right? Or these things could just stay small and get smaller and get smaller. Eventually it's going to pop one direction or the other. All right, so this is just something to know. Let me try something here. Okay. I'm trying to figure out why I can't. I mean, my screen, again, on my phone, and it says it's live, is just completely blank. But I can see your comments. I just can't see anything on the screen. I can normally glance over and, you know, whatever I'm doing on here, I can see on there. But it is just completely blank. But it says live. And usually when it says live, that means everything's okay. All right. Let me see here. Okay, here would have made for a nice scalp. Right here, the shooting star. Right, enter right under here. Low, 29.05. Move down as low as 28.85.25. So that would have been $20 to there. Now, again, you're not going to get out there. Okay, so let's just say once it bounced back to here, let's see where we're at, 28.89. So that's 11 plus 5, so 16. Could have caught $16 right here on that scalp. That's a beautiful hammer. That's the kind I like. Okay, I don't want to, in a perfect world, I don't really want to see a wick. If I do, just a little nub. And then the wick here is at least 3 to 3.5 times the size of this body. I like the bodies to be smaller. Okay, I don't want them, you know, I like this much better than a gravestone doji, but a gravestone doji in theory is of the shooting star family, and it's showing weakness, but I like this better, and I really don't care if that's green or red. Let me see. Here's one right here that just didn't work out, right? It took out the top here, 29.1575, and it only got up to 29.19, so not even $4, just a little over $3. So this is one that just didn't work. Why? Okay, well, mostly momentum, right? Mostly momentum. And I'm trying to remember at the time if there was any factors that I remember why. But when I say momentum, I'm talking about obviously downside momentum. Okay, as you can see here, that's a momentum shooting star, and we continued lower. Momentum shooting star. We came back. We never took it out. Then we went lower. And then this one here, which we already know, it moved down about almost $20. And right now we're in this contracting range. So that's what we're looking at there on ES. Does anybody have any questions about anything before we get off? Anything in particular somebody wants me to look at? Or do you have any questions? We went through our list. We've looked pretty in-depth here at what has happened with ES, and again, our expanding range. Kind of squeeze that in so you can see it again. All right, so here's our expanding range, and we've kind of been moving back through here. Now again, if we go by technical analysis, right, what should happen here? Okay, they would tell you that this means we're going to continue down, right? Because this is the dominant trend. And then once you get into this contracting, whatever you want to call it, pennant, wedge, triangle, I don't care what you call it, this contracting range, technical analysis, conventional technical analysis says we should break out and go to the downside. What I say is just let it happen, okay? Once you start seeing a sharp break one direction or the other, well, then you know which way it's going to go, okay? I don't try to front run these. There was one other thing I think I wanted to cover. Let me see. Okay, Yusef, you want SFIX and then Roku. All right, so let's look at those. SFIX, which is Stitch Fix. Okay, it's had pretty much all downside movement today. Let's go to the daily. All right, so yesterday, or actually the last couple of days, we've been trying to pop back up into this gap in here, right? And as I told you before, 1, 2, 3, 4, 5, 6, 7, 8, 9, a long time, okay? Been a couple of months, 1, 2, 3, probably close to 3 months that we have not been able to get back into this gap. I don't, Yusef, I know you're new, but I know several of the people in the room have asked me on multiple occasions, how likely are these gaps to fill quickly? Well, they are resistance or they're support until they're not. That's always my answer. But right here is a prime example. This thing has been almost 3 months and hasn't been able to fill this gap. Every time it gets up to it, it gets rejected. Now it's getting a little bit deeper each time, right? A little bit deeper, a little bit deeper, a little bit deeper, but it just keeps rejecting. We had this contracting range here, and we got a little bit of a breakout, right? The high yesterday was 1768, right? 1768. So from here, it was over $1.20 something, and that's a pretty good move for Stitch Fix, but it couldn't hold. And then obviously the market was weak today, and this is today, right? Selling off from this doji. Selling off from this doji. All right, so that's Stitch Fix. Again, I can look at the 30-minute, but it's going to tell the same story here. Let's do it like this. All right, here's where we open. Here's where we closed yesterday. So we gap down, we try to poke our head up, and it's just all been down from there. This right in here was that contracting range. So we've actually come clear back down through it, and we're testing the bottom side of it. Let me do it like this. All right, you see that? This is where it was coming together over these past 3 days. There's a lot more busyness on here than when we were on the daily chart, but we've literally come all the way back down through it, come back and retested, and looks like we're trying to go lower below where the contracting range was, right here. See, if I go back to the daily, you'll see it. Yeah, see, we just went right through it. But when I go to the 30-minute, you see all the different candles. You see we came down through it, then we came back up, we retested, and we're trying to go lower again. All right, so that's Stitch Fix. And then Roku. Okay, Roku. And then Kelsey, I see you're in here. I'll get to your question here in a minute. Let me finish up Roku for Yusuf. Okay, so here was Roku on the daily, and we are headed towards earnings on May the 7th. So we had a doji, right? After a sharp move down, doji. We opened up here, we pushed up, and now we've come back down. So now let's look at it on the 30-minute, and let me just take a look at a couple of things here. Okay, so right here, we're trending down. This was the top of a channel, if I remember right. Let's squeeze. Yes, that's the top of a channel. See this? Okay, so this was an expanding range. We came down through here, all the way down, worked our way back through. Okay, again, you can see how you can spend a lot of time near one side or the other, and then sort of like we're doing on ES right now, all of a sudden you can drop through, okay, and then come all the way back up through. So we've just been hanging out at the top of this expanding range. Now, okay, now we move down. Then this doji right here was right at support. Today, this is where we opened. We went up to this resistance level and then pushed our way back down. Let's look at the 30-minute. Okay, on the 30-minute, okay, here's our open. Here's where we push down, right to the level. Look at that, right to it. Then big move up. We went through the first level, up to the second level, 124.24. That's where we caught resistance, and then it's just kind of been steadily moving back down, hanging out right around the 20. We've been below it, above it, below it. Okay, just sort of hanging out right here. And obviously, we only got about an hour to go in the day. Probably going to depend a lot on what happens with the market. Let's see here. Okay, still not doing anything, still in that contracting range. So that's Roku. All right, now, let's see, Kelsey. Let's say you take an inside candle trigger and it starts to go against you. When price crosses back above opening price, do you always switch sides? Okay, that's for you to decide, right? I always say that's an aggressive play. But when you have an inside candle and let's see, let's just pick one. Doesn't matter. Let's take beyond. Give me 1 second here. We'll go through this. Let me get to the daily so we can see it. All right, so when it goes through one side and then reverses and comes back, and you're saying, how do you know to take it? That's why I say it's an aggressive play. You have no idea to know for sure, is it going to go all the way through? Now, when you have dojis or spinning tops, right, it's more likely that it's probably going to go through than, let's say, okay, let's say you have this big candle, and let's say this was an inside candle, but it was much bigger, maybe from here to here. Is it as likely, if you take out this side and start back through, that you're going to go all the way back through a bigger candle? Probably not. Now, does that mean that you can't take that play? No. I mean, you may make it quite a the ways in. You might make it 50% of the way in. But when you have a candle like this, right here, okay, then we came down, we hit here, we reversed, we came back through here. We already know that was about a $1.60 move that direction, and we start showing some strength to the upside. Okay, that's, to me, this is a better play when it's a doji or a spinning top, and you have a nice tight stop. And you can see, we already know this went, what was it, $9 almost $9 from opening price up to here. And then it pulled back. And you don't know, right? You might barely take this out on this side and then start coming back in. Because what is an outside candle? This will be on our list tomorrow. It's an outside candle. What is it? It's expanding the range. It's expanding the range, and if you're, this is a daily. If you're on a 30-minute, it's just on a smaller scale, but this is a daily. So this is expanding the range, just like this was here, expanding the range. Now, one thing we know is that this range hasn't even been taken out yet. This is within this range. See that? This big candle was an outside candle of this. All right, so that creates an expanding range. We haven't even tested. Well, yes, we did. I'm sorry. Yes, we did. We have tested this right here. Okay, it doesn't mean, remember I keep trying to tell you guys, when we draw those lines in for an expanding range, they're a visualization tool. In reality, we have expanded the range right here. We've already expanded this just by taking it out a little bit. If we just take it out a little bit over here, we've expanded it. When we draw those lines in, and they do frequently work, but when we draw them in, they're a visual tool just to help us know that the range is expanding. But your question about how to know when to take it, you can never be 100% sure, but I'd be more apt to take them when I have a doji or a spinning top than if I had a big inside candle. If I had a bigger inside candle, I'm probably not as excited to try to take it. Because the probabilities are it's going to be a lot harder to get through that range. Okay, let me see if you had anything else. Okay, so then you're asking, is it better to wait and look for a failure? So I think what you're saying is wait, this fails on this side, and then enter going back the other way. I've talked about this before. There are some people that only trade that strategy. They only trade that. They never take the first move. Now, by never taking the first move, they miss out on a lot. They miss out on a lot, right? Because sometimes it takes this out and boom, comes like all the way down here. But there's some people that's all they trade. Now, again, they're probably going to have rules like they're only going to do it if it's a doji or a spinning top, and things like that. They're going to be looking for higher time frame confluence. They're going to be looking for, is the overall market going in my direction? So let's just say, I'm making this up. Let's just say that the overall market is going up when this takes this out right here to this side. that is something that I probably don't want to take, right? Because then I'm going against the market. So that might be a good case. You could probably put your own rules together, right? If you wanted to look for those kind of plays, you could say, all right, if I have a daily inside candle and it gets taken out to the side that is opposite the direction the market is going. So if the market's going up and it takes the inside or the bottom side of the candle out, I don't enter and I wait for a reversal and I enter once it goes past opening price. But that's only if it's a doji and it's only if it's a spinning top. And it's only, I mean, you could write out your rules, right? I'm looking for higher time frame confluence. I'm looking for the market going the opposite direction. So again, opposite direction would mean it's going up when it originally broke the bottom here. Does that make sense, Kelsey? So yes, you can do that, and there are people who only do that. I just don't like to limit myself. Although I'm not ultra aggressive, I do like to have different strategies at my disposal. But for somebody newer, sometimes it is better to just have one thing or maybe two. And you just concentrate on those things. These are the only things I'm looking for. These are the only things I'm going to trade because it helps you to be more focused. Yep, I seen your comments there. Yeah, Tilray, we talked about that. It was probably before you were on, so you'll see it when you watch the recording. But the smaller price names can be a little bit tricky and get a little bit tricky when, especially when you're down in that $5, $6, $7, $8 range, especially to the downside, because they're typically not going to move as much to the downside as the potential they have to the upside. All right. Anything else from anyone? Now we're over an hour, which is fine. I'm perfectly happy with that. Perfectly happy. Unless there's questions, I try to keep it to around 45 minutes, but if there's questions, we'll go as long as we need to. And I see a few people jumped off, so I'm thinking, most people are probably about ready to wrap it up, right? When we do our private ones, 45 minutes to an hour seems about right for our private live streams. Okay, I don't see anybody hopping in with anything else, so thank you so much. We'll take one last look here at ES. And we'll see, let me go to the 30-minute, see where we're at as we've just entered into power hour. And we still haven't broken out of the contracting range, right? We were on this candle. Here we are. We opened up right here. And instead of going lower, now we're going back up through the range. This is what happens in a contracting range. We came from here to here, back down to here, back up to here, back down to here. Now we're moving up again. At some point, it'll break out of here. At some point. And that's one of the things you want to keep your eye on. Not just with ES, on any name. When you start to see these things form, draw it in or at least know with your eye. Okay? Draw it in or at least know with your eye, okay, I'm in a contracting range. I'm looking for a breakout one direction or the other. If it does break out, where are my potential take profit targets? Okay, guys, thanks so much for joining me. I'll put the recording link in the room once it uploads. We'll see you later. Bye-bye.